Paddy, I want to talk about buying cars or vehicles in your company.
Yeah, perfect.
All right. Now I'll throw some easy ones at you to start. I want to buy a van or a truck in my company.
A van or a truck.
Yeah.
Essentially, vans and trucks are not passenger vehicles. So they're FBT free and they're not subject to the depreciation limit.
So
They're-
I'm buying $100,000 truck for deliveries.
Yep,
No problem.
no problem. Well, it depends what you're doing with the truck, to be honest.
For deliveries.
Deliveries
I'm
is
getting
fine.
paid for my deliveries. I'm doing deliveries. I'm
Yeah.
dropping off timber to people, to all my customers. And that's it.
Yeah, that's fine. And truck drivers that, have a truck in their company, completely tax deductible. You're never using a truck for personal use, if you're being honest. It's very minor.
No.
You're never going to go to your mate's house. The
It's
fuel is
rare.
just too much, right?
It's rare. And even honestly, even if you're just doing one trip, who cares?
Yeah.
But anyway, no, it's 100% business use, no FBT.
Yeah, mine ain't infrequent.
That's it. No, it's immaterial.
Immaterial,
We
yeah,
don't want
yeah.
to hear about it.
I was actually talking to a mate of mine yesterday, and I said immaterial, and he goes, Pat, I didn't complete my ATAR. Can you dumb it down for me? And he's a chippy, so he's a carpenter, and he goes to me, I go, all right, so you got it like your 4x2 when you're building a house, right? And there's offcuts. Sometimes you need to get rid of the offcuts. That's how I explained immateriality.
That's it.
Because those offcuts are immaterial, they no longer exist.
Don't even take them to the tip. Just dump it on the side of the road as you drive out.
All right, relax there, mate. Relax.
It's a joke.
Yeah, you're showing your Western
do it.
Sydney side, mate.
All right, so vans, trucks, no problems.
yeah.
All right, now let's say I want to buy a passenger vehicle, so a standard Toyota 86. I want to buy a Toyota 86 in my company.
A 86 is definitely not FBT free. However, that doesn't mean that you can't get any deductions out of it. We talked last time about logbooks. So what I'd suggest to the client is, are you genuinely using the 86 for work? And if so, right, what is the percentage you roughly think? If they say 60, 70, 80%, perfect. I'm going to get them to write a logbook. We'll put it in the company. That's no issue. All right. And I don't think an 86 is more than 60 grand. So it will be less than the depreciation limit.
What's the depreciation limit?
I think at the moment it's around the 69 to 70K mark.
Around CS.
Yeah.
Somewhere around that. 68, 69,000.
Yeah. So you're only eligible for GST credits for 1/11th of that, which is for the 25 year, I believe it was $6,334. Now, that doesn't mean you can't take the depreciation all the way to the limit, right?
Yeah.
So although you're only eligible for 1/11th of the credits, if the car is about 80 grand, you are eligible for depreciation on the total limit.
So
It doesn't...
passenger vehicles need to do a logbook to limit how much FBT you pay.
Correct.
Now, just a quick side note for people who don't know what FBT is, fringe benefits tax. This is pretty much the basis of this whole conversation, and what we can and can't buy in the company is around FBT. Now, FBT is pretty much a tax you pay for personal use of business assets. So if you buy a car which you're pretty much using 100% personally, and you can't get a logbook saying that you're doing, 60, 70% at least business use, you're going to have to pay fringe benefits tax on the personal use of that car, which then oftentimes makes it not worth it to have it in your company.
Yeah, the reason why fringe benefits tax was introduced is because employers were essentially paying everyone's mortgage, electricity bills, all the bills essentially, instead of paying the actual worker, right? So they were just paying for the bills.
Pre-tax.
All pre-tax dollars, right?
What a beautiful dream.
What a dream. What a dream. Let's go back to the 80s. Anyways, so that was introduced, and unfortunately, it is at the highest marginal tax rate. So FBT is the highest tax you can pay. So we want to avoid it at all costs. There's a few ways of avoiding it. I don't want to get too technical with employee contributions and all of that. But let's go back to the vehicles. I'm going to throw one at you. What about a workmate?
Okay.
Toyota workmate.
So we're talking about utes now.
Yeah.
We're talking about workmates, utes. This is where it gets tricky, and a lot of people don't understand. They think if I buy a ute, just any ute, it's 100%. It could even be 100% work use. Therefore, I don't need to do a logbook. I can just claim the whole thing. That's not not actually the case. So utes, it's where it gets a bit tricky, and it all depends on, or mainly depends on, what the carrying capacity is of that ute to determine whether it can be considered a work vehicle or passenger vehicle. So a workmate, for example, have you checked the specs of a workmate recently? Is that what's the specs on that? Does it have over $1,000, 1,000 kilos
of payload? It
payload?
actually falls under one of the other categories. It's not a passenger vehicle.
Okay.
So you
Tell
can
us a
only
bit about that.
yeah. So there's a few criteria. One of them is it a passenger vehicle? Yes or no. If it is no, so for example, a truck, like we discussed before,
What do you mean by passenger vehicle?
it does it carry passengers more than I believe it's more than 2 passengers essentially. I need to go back into the specifics for that one.
Yeah. So check the carrying capacity. Check with your accountant before you buy the ute, because there could be some restriction to how much you can claim as work related, and you may need to do a logbook even if it's a ute.
Yeah, Michael. The truth of the matter is, we have good memories as accountants, but our memory isn't perfect, right?
Oh, there's too much to remember.
So it's case by case. There's over 1,000 vehicles in Australia, right?
They all have different specifications, and they're all treated differently.
Correct.
Depending on the specs.
So we do gather all the facts first. We always get the invoice from the client and make sure that we look at those specific details of the vehicle, and then we determine whether it's FBT free, not free.
Or if there's a depreciation limit on it.
If there's depreciation limit on it. Like a perfect example is a Ferrari. Like that's a bit more black and white, you know?
Why can't I get a Ferrari? I have built up this beautiful business. Hey, Paddy, I drive to my clients in my Ferrari. I take my Ferrari, I go see my clients, I do all my client meetings. Why can't I claim it in the business?
I always say it's always a mistake to put the Ferrari in the business, because a lot of these luxury cars actually go up in value, especially if you buy at retail. You can sell it on the market for higher than what you bought it for.
So you want to treat it as capital in your personal name instead, or in a
no, it's a collect. Yeah, it's so yeah.
Get the CGT discount on when you sell it.
No, there's no CGT on vehicles, mate.
You said it's collectible.
Yeah, there's no CGT on vehicles.
Hold on, this is a different conversation. You got to.
If you're not claiming
On collectible vehicles.
Yeah, there's no CGT.
What do you mean there's no CGT on collectible vehicles?
On Ferraris and stuff. If you buy a Ferrari in your personal name and then you sell it, you don't pay CGT on it.
Sorry, I'm probably thinking of collectibles in different investment
like
vehicles.
Arts. Like classic cars.
Classic cars.
I believe it's still FBT, CGT free.
Well, yeah, that's
it's like a boat.
Pat, if I use my Ferrari and I do a logbook and it's 90% work use, why can't I run that in my company? If I have a logbook that says 90% work use.
That's perfectly fine. I have no issue with that. But let me tell you your tax implications. How about that?
All right.
You can only claim $6,000 of GST when you buy it.
Yep.
Right?
Depreciation up to 60 grand.
Depreciation up to $69,000.
Yep.
Okay, so I only get $69,000 over 8 years of deduction.
Yep.
But guess what?
What's my FBT bill? 10% on the running cost.
On the running costs and the deemed depreciation. So they changed the rules a little bit when it comes to the depreciation for FBT
That's
reason.
right. It's on deemed depreciation.
So what's the deemed depreciation, Mick?
On the what? On the 500K.
On a $500,000 Ferrari?
$100,000.
Yeah.
Plus the running cost of about
Plus running costs of 30 to 40,000.
And so you're paying about $14K.
$14,000
is a taxable value.
Yep.
No, sorry.
$14,000 of
10%. That's right.
Yeah. $14,000 is the
so you're
private.
Paying about $8K a year, $7K a year of FBT.
$7K a year of FBT. Yep.
And the only real deduction is in the first few years, and then.
No, it's great. You get $50K in deduction.
But you're paying tax $7K a year for as long as you own it.
Correct.
So.
And then when you sell it,
then you pay tax on the gain.
What are you paying? What else are you paying? GST.
Paying GST on the sale and the tax on the gain.
And the GST is not apportionate.
Yeah, it's on the whole amount.
It's on the whole amount. If I sell it for $500,000,
you're paying, let's see, 50K of your GST. You're going to pay 50K GST bill as well as a gain on whatever if it goes up in value. a gain. Pay
Correct.
tax on the gain on the sale as well.
Correct.
So for cars like that, it's not worth having it in your company.
Nope.
Don't do it.
And whenever is it 90% business when you have a Ferrari? Let's be honest. When is it real?
Why are you trying to ruin the fun for everyone?
No, because it's audit bait. Let me tell you a story, mate.
I love stories.
All right.
You had a client
I had a client.
that bought a Ferrari. Don't tell me bought a Ferrari.
He didn't buy a Ferrari. They actually passed the audit. They had a Range Rover.
Okay.
And they were looking to they actually did. They claimed about 92% logbook. Luckily for them, they didn't take the Range Rover out much. So their logbook was legit, and the ATO passed the audit, but the running costs were next to nothing. The depreciation wasn't much. When they sold the Range Rover, they had to pay back the GSC.
That's it.
So they barely got any deduction for it anyways.
Yeah.
And they copped this whole FBT audit for no reason. The whole reason why they got the FBT audit is because literally the ATO looked at it and said, oh, we're going to order all the Range Rovers. We're going to order all the C63s. Tick, 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 tick,
Sounds
tick,
like they're
tick.
just targeting the Lebos in Western Sydney. Oh, leave my cousins alone. What have they ever done?
It's very funny. In my eyes, a
not worth
Ferrari is audit bait.
Yeah.
Yeah.
A lot of those cars are not worth having in
headache.
your company. Even the high value cars, it's not worth it. If it's you got a Toyota Camry and you have 90% business use on that Toyota Camry, maybe that's fine. You know, if you have a logbook,
Well, the deductions are great then.
yeah.
You
But-
got your first year of depreciation on a $40,000 car. It's 25%. That's 10 grand depreciation. Then we've got running costs of 10 to 15,000. It's 25. And then you're saying that it's 90% business usage. We're looking at a $22,500 deduction. That doesn't include the GST that you get back
Yeah.
from the government, which is great. So I'd say, yeah, that's terrific.
So there you go. High value cars, keep them out of your business. It's not worth the headache. It's not worth the FBT.
Not worth it.
If it is a passenger vehicle, have a logbook, have a good logbook. Otherwise, keep it out of your company. Just have work vehicles. Utes, whether you need to do FBT or logbooks, if you need to do logbooks, or whether there's a depreciation limit, it depends on the ute.
I
So-
can't stress enough how important it is to speak to your accountant prior to buying a ute.
Yes.
I don't want you to go buy a Toyota GR and then go to your accountant and say that it's FBT free. Or I've bought a Ford Raptor, it's FBT free. And then you go to your accountant and he says it's not subject to the car limit.
That's right.
Or it's not FBT free
That's right.
due to this, and this reason. All right. So please, for the love of God,
Speak to your accountant before you buy a ute.
before you
Take-
buy
take
any
one thing.
vehicle,
Speak to your accountant before you buy. We gave them what they need to know about trucks, vans, passenger vehicles. But utes, speak to your accountant.
we had an anonymous client ask us the question of whether they can put their missus on admin and buy their missus a car in the company.
Okay. So she does admin, so I'm assuming it's work from home the whole time. What car were they asking to buy?
Toyota Kluger,
A Kluger. So how much was that?
50K.
50K Kluger. And assuming it's for your wife, realistically the logbook would be 0% business use since she is doing admin. It's majority of her work from home. So you can't get a good logbook on
Nah,
it.
Mick, she has to go to the post and
Yeah, the post office. Is she going
And
post
buy
office every
stamps.
time she drives?
and
All right.
Yeah,
I'm
that's
sorry.
it.
2% business use. So no percent business use. So if you can't get a good logbook, if you buy it under the company, FBT is on the statutory method, which means 20% of the vehicle value or the vehicle purchase price, sorry, is deemed as the FBT value. So let's say you bought it for 50K, including GST. The FBT value is $10,000, which is $4,600 of FBT you have to pay per year. Now, you still get to claim the depreciation, you still get to claim the running costs, which let's call it, $10,000 a year. And the tax benefit is you claim $2.5 grand tax deduction. It still might not be worth it if you can't have a good logbook to have that in your company because you're paying $4,600 FBT and maybe only claiming $2 to $3 grand of actual tax deduction. Or it might even be break even depending on how much you're using it. But oftentimes it could be just break even. There's no point. Or you could be paying FBT.
what percentage would you say is a reasonable one when it comes to business usage in a logbook?
Would be different calculations depending on the value of the vehicle. So it'd be different for each vehicle. But if you're at least doing 40-50% plus in your of business use, do a logbook and run it in the company. But then again, I'm saying that generally depends on the vehicle.
Here's a twist in events. What if he buys her a Tesla?
Ooh, Tesla electric vehicles. So electric vehicles, I believe they are still FBT free. So it's a government incentive. Hopefully they don't take it away anytime soon. But if you buy an electric vehicle in your company, that is FBT free, but it's still subject to the depreciation limit.
It's also if it exceeds the luxury car tax threshold, it is not FBT free.
So that's
So
what they've said recently.
Yeah, no,
has that
so
been- has
that's
that
been
been-
around. So I believe the Tesla Y long range is about 90K or so. That definitely exceeds the
What's the
luxury tax.
LCT limit?
I believe it's about 86.
Okay.
86,000.
So these probably
So-
one or two models brand new.
Yeah.
One or two Tesla models brand new. The base maybe. You could buy in the company. You know, if your wife does admin, if you buy a Tesla, doesn't matter that she doesn't drive for work. It's FBT free under the LCT limit
Correct.
and still subject to depreciation limit, but at least you don't have to pay any fringe benefits tax. It's still worth having it in the company.
So once again, contact your accountant.
Before you buy any cars,
buy any
call
cars.
your accountant.
100%.
Now, there is a fun little exception in motorbikes.
Really?
Motorbikes, and I have to look up the exact numbers, but motorbikes in a company are actually FBT free. So that's a sneaky little tip there. If you like your motorbikes and you have a company, they're FBT free. Don't tell the HR I told you. They're probably going to catch on and probably tax it soon. But that's a little sneaky one for you.
No jet skis though. Please, no jet skis.
Jet skis are not motorbikes. You can't claim your jet skis in the company unless. Are you? What about a marine biologist?
Bruh, I tell you, my brother had a site on the water. My brother's a chippy. And he had a site on water. He actually took the tools on his jet ski.
Yeah, did he?
Yeah, bro. Yeah, he did it.
Yeah, and do you know what? I'm the next Prime Minister of Australia. Vote me in.
That was all in jest. We do not claim jet skis.